Hey guys, Mike here. So we're going to talk about something to me is very important because it's coming up. It's a time period throughout the year, throughout the stock market, where it has a very bad reputation for a reason, and where people see less returns happening. Okay, and there's a lot of people throwing charts out about it over the history. Here's what's going on, all that stuff. But you know me, I say let's look at the chart itself. Let's see what the charts say, and this is where it's critical to watch because you're going to notice a pattern in the charts I'm going to show you, which could absolutely affect right now, this year, coming up here, in this very crucial period that we're talking about, okay? And so pay close attention to it. Let me know if you spot it in the comments before I even say it. But, hit the like, subscribe button, notifications all, really appreciate it. And let's go ahead and get into the charts and, the timing, and should you be invested during this time range, or be even buying stocks, or should you just be selling? And you can see right here, this breaks this down into 6-month periods, right? And people say sell in May and go away and all this good stuff. From May to October, obviously you can see over historical patterns, it returned the worst returns of all time. Like that period over all the rest of these 6-month periods is the worst. And that's plain as day to see. Then when you come up here, this is frequency return for the S&P 500 from 91 to 2020. Obviously the red is May to October returns. You can see it has the most negative returns. From 0 to 5%. It actually does, even better than the S&P. But then as you can see, for the larger gain returns, it does much less as you get to 10 to 20% returns during this time period. Don't worry, I'm going to show you this on the charts. And then if you look at this one here, just one more, sell in May and go away, the performance during the 6-month period, starting from May to October. And it's pretty plain to see this goes over, all-time, 50-year, then we got 20-year, 10-year, and 5-year. But if you notice, what I always argue is we're in a different kind of stock market over the last at least 10 years. And you can see as we come farther and farther, or closer and closer, I should say, to our time period here, you can see the returns got greater and greater, right? And it almost matched what was going on from November to April, and when you get to the 5-year period. And of course, why is this? Why is November to April better returns versus May to October? Put in the comments what you think it is. Some simple ones are very easy to think of. How about major holidays? From November to April, you got Thanksgiving, you got Christmas, Valentine's Day, Easter, all those big ones right there. And then like May to October, the kids are out of school for the summer, people are traveling and stuff, doing less things. And so, that could be another reason as well why you see that. And there's definitely a couple others, but now what I want to do is go into the chart, and I want to go back to the last 5 years. So from 2017 forward. And why am I picking the last 5 years? Because this is when a lot of retail investors came in. This is when Robinhood came about. Webull came later on. This is when algorithms actually just completely start dominating the scene right here. And so it's just kind of, to me, become a different type of market. You saw that today, if you were looking at the turnaround that happened at the very end of the day, it was like, wow, was that a 180 or what? But we've seen that over and over. And pay very close attention to the times where you see the biggest gains from May to October. Okay, this is key. This is where you'll kind of spot maybe what's really going to affect this year. And starting in 2017, you can see it's around 10.5% gain for the month. You see how volatile it is? Those moves up and down are huge, right? And so not a great year. It's better than some of those averages or whatever, but you can see it's big time volatile, huge swings, kind of reminds you what we're in right now. So not the greatest year. And so, what do you see from, January to April, rocket ship up? What do you see from January to April? You see a rocket ship up. What do you see from November going through December? You see a rocket ship going up. Those obviously without even measuring were bigger gains that year. And then if we go into 2018, where obviously we're rolling off the balance sheet, going through a lot of what we're going through now, minus inflation, you can see it was an abysmal year. You got this big move up, and then of course we had the crash. But before the crash, it was up almost 15%. So it was moving nicely, right? And so, that was actually a good year until we had that crash at the end of the year. And then you go into 2019, where it is just a brutal time from May to October, right? You get a whopping 4%, but look at the volatility. Those are massive swings, up and down, up and down. And you'll get the beginning of the year, rocket ship, end of the year, another rocket ship, right? Going into 2020, I don't count 2020 against anything. I never count it in the equation because it was nothing but a rocket ship from the beginning of April all the way actually to February of 2021. So we skipped that. Then you go into 2021, you can see beautiful year, almost 15%, as you can see, extremely volatile, but it was a good year from May to October. And then what do you see at the end of the year right there? Boom, it's a hot mess. You know, what do you see at the beginning of the year? Hot mess. And so did you notice what was happening on those 2 years you saw where the NASDAQ 100 actually returned 15% from May to October? What was going on? It was what was happening at the beginning of the year. Exactly what's happening right now. It's a hot mess, right? What was going on in those 2 years? It was a hot mess in the beginning. It was a major sell-off. And what does the stock market always do, right? It has those major rallies, right? And just look at what happened right here. I mean, you had a 16% move in 16 days. You will be hard pressed to go find, that many more times this happened on any chart. I mean, that is a major move in such a short amount of time for an index, okay? But that's what you see happening. Anytime the market's going to be down 20, 30, 40%, whatever it is, there are going to be those rallies, right? And they're going to be rip your face off rallies, maybe long extended rallies, maybe short rallies, right? Everybody's calling this a trader's market right now, which is totally true, by the way. But also, it's a market for long-term investors who are looking to dollar cost average into the stocks they love, the index funds, you name it, right? To get them on cheaper than they were. Some of these stocks are down to their 2018 levels, right? And is there more pain to come? Absolutely, there's more pain to come. I mean, is the Fed going to drive us to a recession? Probably. I mean, they don't have a good track record, right? But the recession, that talk is being way overblown because I think it's something you need to know about and be aware of. But that ain't going to happen until at least 2023, right? And we won't even know we're in one until you get 2 declines in GDP growth. And so, don't sweat that right now. What you're looking at is have your list, go out there and get the stocks you love. Don't let anybody talk you out of it. If you've done your research, if you're a trader, obviously you're loving the volatility, right? It's creating all these opportunities for you. And so, take the opportunity to learn to swing trade, for God's sakes. I mean, but, have your plan for dollar cost averaging in, Some people like to do it blindly. That's fine. Look at the VIX. When the VIX is over 25 to 30, somewhere in that range, and even higher, you can't lose, right? Because that's when you're going to make your biggest gain, especially in swing trading, because it's going to drop. It always does. Just look at the chart, okay? Same with these stock markets. And so are we going to go on a run, May through October this year? I have no idea, right? We're in the middle of an election year. You got inflation like I've never seen in my lifetime. The Fed's a hot mess, right? Everything's going on. You got the Russia thing, all this stuff. But the one thing we know about the stock market, what runs it? Greed. Greed always wins out, right? We thought we were, coming to March 13th, everybody thought the world was coming to an end. All of a sudden, boom, 16% run in 16 days. Like that's crazy, right? And our stocks are up 40, 50% in 16 days and then sold right back off, all right? So remember, the algorithms run it, greed runs it. And have you ever seen any year where literally besides the dot-com bubble, I'll give you that one, where for a whole year it just sold down. So far I hadn't seen that again. So for the dot-com bubble, it was rough. But even then you had some runs. But in the dot-com bubble era, remember, algorithms didn't run that. Okay, it's a whole different market. Retail investors were almost non-existent. So, it's a different market now. But there is a good chance. And I think that's why I even see some people calling for that. Because I think they've looked at the charts and they say, oh, could definitely happen, right? And so, we'll see. But that's why, in a way, maybe it is kind of a good thing they were selling off at the beginning of the year, right? And that's why I've been saying the best thing that happened this week is for these FANG stocks, these big mega cap stocks, to not hit earnings, give poor guidance, sell the S&P off into crash territory, and then that's when you'll finally, for sure, get to see big money flooding back in because it's rare throughout the last 20 years. How many times has the S&P been below 20%? Go back and look it up for yourself. Okay, but it's not a whole lot, right, compared to the 20-year span, all right? And if you take out the dot-com bubble and obviously the 08 crash, and the 2020 crash is only 3 times, right? It's a whole lot less than that. So, that's what you got to be thinking about. Obviously, as I sent the members this morning, you got China doing new lockdowns in Beijing now, and Shanghai still on lockdown. I mean, that's a whole different story, right? And we're not going to feel the effects of that for a while. But right now, I'm not saying it's going to happen tomorrow, but looking at this, looking at the data, which is what I go off of, if we keep selling off, right, and we hit those, especially the SPY or the S&P hits crash territory 20% or lower, there's a very good chance you see a run coming through the summer. We'll have to see. But, you know, let me know what you think down in the comments. You know, we'll see what happens. I told the members this morning, good luck finding good news. I mean, it's tough to find, honestly. And that kind of lets you know. That's why I believe you'll see, you know, I said the other day, I said, I don't see like extreme fear. I see fear, but not extreme fear like it was in March. And so we're going to see, it seems like the news, they're trying to push it down into extreme fear to push this market down even farther, which is fine with me, by the way. And because it just makes it that much more likely the market is going to have a big move back up. Okay. And so anyway, hope you got some out of that. Hit the like, subscribe, and if you did, let me know what you think and what you were doing. And I will see you later.